Understanding VAT. Introduction to the module. VAT, or value-added tax, is a tax imposed on selling products and services to customers. It is a major worldwide tax instrument that promotes economic growth. VAT revenue is a significant source of government revenue in a country. This module will help you understand how VAT works and introduce its primary aspects. Learning objectives. From this module, you will be able to describe what is value-added tax and explain how it works. Comprehend the core features of value-added tax. Recognize the VAT system in the UK. Identify the impacts of Finance Act 2021 on VAT. What is value-added tax? Before selling the new or enhanced product or service, a producer, whether a factory, distributor, advertising agent, hairdresser, farmer, racehorse trainer, or circus owner, adds value to his raw materials or acquisitions, other than labor. The inputs, raw materials, transportation, rent, advertising, and so on, are purchased. Employees are paid to work on these inputs, and some profit is left when the completed goods or service is sold. As a result, value contributed can be viewed from either an additive, wages plus profits, or subtractive, wages minus profits, perspective, output minus inputs. Value added equals wages plus profits equals output minus input. The VAT is imposed whenever value is added to a product or service at any point in the manufacturing, distribution, or end sale process. VAT is the most common ad valorem indirect tax. It is imposed on the consumption of products and services traded within the European Union and in other regions of the globe. Although some nations use the term Goods and Services Tax, GST, instead of value-added tax, VAT, the mechanisms are the same. VAT was adopted by about 140 nations throughout the previous century, accounting for around 20% of worldwide tax collection. Mechanism of VAT. Before discussing a brief overview of VAT systems, it is critical to comprehend the value-added tax mechanism properly. Many individuals struggle to understand its rationale and frequently assume that the tax is paid multiple times by multiple parties involved in a single transaction. The VAT system's complexity is unfortunate because, at its core, the tax is quite simple. The first thing to remember is that VAT is not the same as sales tax. All consumer prices in the UK and the European Union must be listed gross, including VAT. The retailer adds sales tax to the purchase and pays it straight to the government. As a result, it's yet another unnoticed tax that people rarely consider paying. VAT stands for value-added tax, which is exactly what it is. At each stage of their journey from the original supplier to the ultimate user, the tax adds 20% to the value added to goods or services. Core features of value-added tax. The overarching purpose of a VAT. The primary goal of a VAT is to levy a broad-based tax on consumption, which is defined as final household consumption. In theory, only private persons, not corporations, engage in the type of consumption for which a VAT is levied. In fact, however, many VAT systems impose a VAT penalty on private persons' purchases and various institutions engaged in a non-commercial activity. The VAT is distinct from excises that target specific types of consumption, such as the purchase of fuel or alcohol, because it is a broad-based tax. The VAT burden should not fall on businesses as an inevitable consequence of the fundamental assumption that a VAT is a tax on final consumption by families. Because enterprises are not households and, in principle, are incapable of final or household consumption, this follows as a matter of simple logic from the discussion that the VAT is a tax on household consumption. In practice, if a business purchases goods, services, or intangibles that are utilized entirely or partially for the private consumption of the business owners, VAT regimes must evaluate whether the purchase should be classified as made for business reasons or private consumption. The central design feature of a VAT. The tax is collected in stages, which is the key design characteristic of a VAT and the feature from which it gets its name. Each company in the supply chain participates in the tax collection and control process, remitting the proportion of tax that corresponds to its margin, i.e., the difference between the VAT imposed on its taxed inputs and the VAT imposed on its taxed outputs. As a result, the tax is based on the value added at each stage of production and distribution. In this way, the VAT differs from the retail sales tax, RST, which taxes consumption through a single stage fee levied solely at the point of ultimate sale in theory. VAT is a stage collection process. This basic characteristic and the fundamental premise of the VAT is that the tax burden should not fall on enterprises. It necessitates a method for businesses to relieve the VAT burden they incur when purchasing products, services, or intangibles. There are two main ways to accomplish the phased collection procedure while alleviating businesses of the VAT burden, allowing subsequent taxpayers to deduct the VAT they pay on purchases while accounting for the VAT they collect on sales. Each trader charges VAT at the rate established for each supply using the invoice credit technique, a transaction-based method, and passes an invoice stating the tax charged to the purchaser. The purchaser can then apply that input tax to the output tax levied on its sales, remitting the balance to the tax authorities and obtaining refunds if any credits are left over. The tax is collected directly on an accounts-based value-added measure, which is computed for each business by deducting the VAT calculated on permitted purchases from the VAT calculated on taxable supply under the subtraction technique, also known as the entity-based method. The invoice credit mechanism is used by almost all jurisdictions that have a VAT. In general, OECD states that have a VAT levy the tax at every level of the economic process and enable everybody, but the end consumer, to deduct taxes on purchases. This design characteristic gives the VAT its essential nature as an economically neutral tax in domestic trade. The entire right to deduct input tax throughout the supply chain, save by the final customer, assures that the tax remains neutral regardless of the product's nature, distribution chain structure, or delivery method, for example, retail stores, physical delivery, internet downloads. VAT system in the UK. The UK is one of these countries that implemented a VAT system in order to join the European Economic Community, known today as the European Union. The new tax system was implemented in 1973, and HM Revenue and Customs, HMRC, is the agency in charge of VAT revenue collection. The only remaining point of contention is over specific issues rather than the tax's existence. However, each country's legislation is unique. The process of enacting the tax can be analyzed in retrospect to determine which regulations, methods, and strategies have shown to be the most efficient and effective. There were various motivations for establishing VAT in the UK, but the most common one was a desire for a tax. It was broad-based. It was based on consumption, an indirect tax. It encouraged harmonization. It contributed to the balance of payments policy. It was self-enforcing. A shift from direct to indirect taxes as required. Any package must be self-balancing. The reform package must be perceived as fair. Any new tax must be as simple to administer as humanly possible. Any new tax must be broad-based for the rate to be as low as possible. Tax reform would put a stop to the wholesale sales tax, as well as the inefficiencies it had caused in both production and consumption. Many of the aspirations and anxieties expressed before the introduction of VAT in the UK, like with other taxes, did not prove to be as significant in actuality. The VAT was not as widely adopted as its proponents had planned. Its contribution to tax harmonization and the balance of payments was not as significant as some had hoped, and assertions that VAT was self-enforcing were overstated. The disadvantages associated with VAT, on the other hand, were not as substantial as its opponents claimed. VAT has been a valuable and reliable tax over the past 30 years, and it is now one of the largest sources of tax collection in the UK. It is undeniable that it has become an integral part of the financial landscape. The cost of practically everything you buy increases by 20% by value-added tax, or VAT, except food and children's clothing. VAT is a significant charge since you have to buy a lot of things every day. In the United Kingdom, it raises over £115 billion each year. Impact of Finance Act 2021 on VAT. The Finance Act got royal assent, becoming law, on June 10, 2021. The most important VAT-related initiatives are the following. The temporarily reduced VAT rate of 5% for hospitality, holiday accommodation, and attractions is extended until September 30, 2021. It is followed by the implementation of a new reduced rate of 12.5% beginning October 1, 2021 and lasting until March 31, 2022, when it will revert to the standard rate. Measures for the COVID-19 VAT deferral payment plan have been legislated, including installment payments and penalties when delayed VAT is not paid, or there is no agreement to pay. Changes are made to allow the scope of making tax digital for VAT to be extended to all VAT-registered firms beginning April 1, 2022. Highlights of the module. The value-added tax is imposed every time value is added to a product or service at any point in the manufacturing, distribution, or end sale process. Before selling the new or enhanced product or service, a producer adds value to his raw materials or acquisitions, other than labor. At each stage of their journey from the original supplier to the ultimate user, the tax adds 20% to the value added to goods or services. The primary goal of a VAT is to levy a broad-based tax on consumption, which is defined as final household consumption. The tax is collected in stages, which is the key design characteristic of a VAT and the feature from which it gets its name. Thank you. You have reached the end of this module. See you in the next one.